All right, good morning. Let's see here. So as of right now, all I see is AKLI. There's nothing on this scanner. I have another scanner running on my phone. Um, it's WK. The volume's kind of low on WKHS. And just real quick, this session is going to be recorded, and main thing I want to focus on today is, of course, I'm looking for opportunity in the market. But if you're new, intermediate, or advanced, and you want to join the group and take advantage of the investment plays that I make with essentially having zero knowledge of how to execute in the market. Very simply, inside of the group, I will post the stock that I'm looking at. Like example, I said watching AKLI to pull back near or at 21 and 28 EMA on the 5-minute chart for entry, quick flip, quick percentage flip, 5 to 10% plus gain. So in order to copy that trade, that investment, all you would need to do is from your phone, laptop, or computer, whatever you're using, type in the stock ticker, AKLI. Like let's say I had WKHS right here. The volume's kind of low, but if it breaks pre-market high, I'll consider that. But so just like the signal you see in the group. And so right now it's coming near where I'm considering entering. So I've typed in the stock's ticker symbol, and the 21 EMA is this red line. The 28 EMA is this white line. So essentially I'm just looking for it to pull back to either of these. And the closer it gets to this area, I'm going to start watching the level 2. Now, you don't necessarily need to watch the level 2 when it gets to this area. I just do it for a more accurate entry. And what I'm looking for, once it gets down to this red or white line, what I'm looking for here is you just saw it very briefly. There's a 3-digit order right there. Of course, it needs to come lower. It needs to get down into like the 47, well, basically 43 to 46 area. And once it gets down there, I'm looking for 3-digit orders here or 4-digit orders here. What does that mean? If it's a 3-digit order, that means that somebody is looking to buy, like this 157 means somebody is looking to buy 15,700 shares of this stock. And why am I looking for large orders? Is because that's going to tell me where there's a potential bottom. And so where there's a potential bottom, that will potentially give me support of my position for it to go up into profit very quickly. Like this is 11,900 shares. This 165 is 16,500 shares. It seems to be bottoming here. So it may not dip all the way down. And then the reason I can't give the specific price in the group is because this red and this white line, it fluctuates or deviates based on price. And so if I earlier, when I called it in the group, I called it in the group at 9:20 a.m., which is over here. You can see the price of it at that time was in the 37s and in the 41s. But now that it's 9:35, the price of the red and white line is in the 47s and the 43s. So you won't need a specific price. You're just looking for it to come down in this area. You'll catch it. And the usual will bounce pretty fast. And the reason I'm even considering this is because it's a lot of it's a lot of volatility and upward momentum. And I really like that this blue bar right here, if you're a beginner, this blue bar is the volume chart. And this is the largest volume in the last 50 days of this stock. So I do really like that as well. And so once this gets down, if it can get down here, I mean it may not. If it doesn't come all the way down here, this next candle that opened, it may pull the 21 and 28 up to look like it touched it. And then if it does that, then I'll just take it as it's coming back through as it coming back through the excuse me the middle VWAP, which is this purple line. VWAP means volume weighted average price. If you're a beginner, you may just want to watch this video a couple times. You'll understand it pretty quickly. Stock trading, stock investing is very simple. Only thing that reason why most people fail is because the lack of patience and lack of discipline. Without patience and discipline, you're not gonna make it in this game. But I feel like without patience and discipline, you're not gonna make it in life successfully anyway. Because whether you're working a job or you're starting your own business or you're an entrepreneur, 1099, whatever, you're always gonna need patience and discipline. And so we're getting close. We needed to break the low of this. It did break the low. And so, and again, you could see it's moved up even a little bit more now. It's now at 40, basically 48. Yeah, it's 44 to 48, the red and white line. It's almost there, just a little bit lower. I prefer to have it because it's so volatile. This is up 142% right now. Because it's so volatile, I prefer to have it come down, wick down here so I can grab it, get my entry in, and then have my quick percentage flip of that 5 to 10% plus gain. But if not, then I'll basically take it right as it gets above this purple line. And then I'll just risk the bottom of these. I really prefer a dip down though. Because because when people are selling and I'm buying when they're selling, I have a higher probability of capitalizing on the investment. And WKHS did exactly what I said. Literally put an alert. I said if it breaks this, I would be looking to execute on this, but I have missed the opportunity just because I was going over this stuff with you all. So that's kind of the gift of curse of like teaching and investing. It's like if you're only investing, only trading, you're going to be fully focused and you won't miss opportunities like that. If you're doing both, you miss opportunities, but at the same time, you're helping other individuals gain knowledge and increase their wealth and increase their financial status. And so it's a gift and a curse, but you know, it is what it is. I'm not gonna cry because I missed the opportunity there. And I mean, this could pull back to the 21 and 28, which is this red and white line. It could pull back, and then I'll consider a quick flip. The initial move, I'm looking more so for like 10 to 20% gain, but when I'm catching it on a dip, I'm just looking for 5 to 10% plus, just because it's a pullback, and so it's kind of opposite of the current momentum. Momentum is clearly showing that this stock price is going straight up, and so a pullback is either loss of momentum or just a necessary pullback for it to continue higher. But it looks like it's going to dip down, which is what I want. And it's been straight red candles. So once it starts buying up, it should hit 5%, 5%, 10% plus gain pretty quickly. But, and again, this is just patience. Like, I mean, there's other people who bought this stock up in this area and they're pretty negative. But for me, I know exactly what I'm looking for. I know what makes me money consistently, and just being patient and waiting for the entry to come to me versus me chasing the entry or forcing the entry is the difference between making five figures a year and making seven figures a year. And so, and that's another thing I really like about the live trading that I do. Well, going to be doing a lot more um, for the weekly. And I do like this order right here. How it's pretty, it was 42,000 shares, but it's still not in the area that I need it to be in. And so, but I do see that they're stacking it there. But it's good to see that there's like large buy orders because when it does dip down here, as soon as it gets, I mean, it's basically here. So if they can wick it right here, okay, so I'm looking to get in like right, I'm gonna go max 505. I got majority filled. When I say 505 is 0.505. You don't need to be as quick if you're a beginner and you buy this at like 51, or if you buy this and like it's even coming down a little bit more now. And so that's good. And so definitely have plenty of time to get in at 505 because it went under it twice. So 505, we're in. And let's see, 5% gain for us would be all I do and type in the, actually, let me just show you right here. Pull up my calculator. Keep it simple for us all. So if a 5% gain, 505 plus 5%, which means when price touches 53 cents, would be considered up 5%. And so that's right here. And it's coming down a little bit more, so I may buy more. I didn't execute my entire position at 505 because it didn't touch, but it looked like it was turning. And so I want to keep this video as simple as possible for beginners. Um, so if you're a beginner, you could wait for that turn, like that large order. You can see there's more large orders here, and you get in right above them. And so, and you could see other people are hopping, they're putting their order right on top. That's basically what you want to do. And so once it once it actually touches either one of these, that's where I usually enter. But I threw on a piece for that first turn just to see if it was gonna go because of the volatility. It didn't come down and touch it, but now it looks like it is touching it. And you can see, look, I was negative for a little bit and now I'm right back in profit. And so um if you're a beginner, you would have probably had to enter in the 48 to, we'll just call it 48 to 50 range, 2 cents. And so 53 is like the first initial target. And so if I clear this out, if I take my entry that I got and I add 10% at this price right here will be 10% gain. And so I'll just create an alert. You don't need to create an alerts. I just do it for myself. So it's 948. It's holding above it very nicely, but at the same time, it's not instantly pushing. And so it may come down and touch this, it may come down and touch the 28, which is the white EMA. But as far as the signal goes, if you're just like brand new, not sure what to do, like I said in the group, watching for it to pull back near or at the 21 and 28 EMA on the 5-minute chart. This right here is the 5-minute chart. The white one is the 28 EMA. The red one is the 21 EMA. It's pulled back nearer at it. You buy, and then you look for your gain. And then what would tell me that I'm wrong? Because in investing, I mean in life, but definitely in investing, if I'm wrong, what would tell me I'm wrong is that the a candle closes underneath the 21 and 28 EMA. Let me see if I can show you an example of that. Oh, I just had an example, but it disappeared. Um, I mean, everything on this scanner that I'm looking at is gonna be going up. So maybe I'll find a or I can just go back to a different. I can use this right here. I'll show you what I mean. What would tell me I'm wrong on this investment opportunity? And so let me clear these out. So it's clear. All right, so right here, this is essentially the same thing. I have a volatile push. It pulls back to the 21 and 28 EMA, get the entry, 5 to 10% gain. If it's had, perfect. I'm in and out of the trade or the in and out of the investment. Now, if it closes underneath the 21 and 28 like this candle right here, it it's closed under it, that I would consider, okay, I'm wrong. Or the bullish momentum is slowing up so much that I just want to get out. Now, if you're a beginner, if it closes under this, what do I mean by closing? Like, I mean, literally, you can see this box right here, this rectangle is called a candle. It literally, the bottom of it is underneath the 21 and 28. That's what I mean by close under. If you're a bit more advanced and you want to be more patient, my next level, my next level of close under is if the box or this candle closes underneath the 83 EMA, which is this turquoise one. And so if I'm here and I'm watching this, like say, I mean, this one, when I took the trade, I profited. It did 5 to 10%, so I was out. But let's just say it didn't do 5 to 10% gain, and I see this for me, this is a red flag. But if I'm being want to be a little bit more patient, like maybe they're just trying to shake more people out, I'm just gonna hold it. If I then see this, I have to get out. I have to get out because okay, our 5%, we're up over 5% now. Our alert just got hit. I have to get out because closing under the 21 and 28 usually will lead to this anyway. But sometimes there was an example, I think it was UCAR. Yeah, right here. I called this no, it wasn't UCAR. I took UCAR on the break of pre-market high. What was that stock? Oh, I believe it was IVP. No, it definitely wasn't. Maybe it was CISO. Yes. Here we go. Let's see if I can make this a little bit clearer to see. Okay. So right here, I had the volatile push. It came down and it basically was looking for the dip. I don't enter in the first 5 minute candle, but so I was looking for the dip, but it closed underneath the 21 and 28, but then um it stayed above. For an advanced intermediate, you know, this is support. It's supported above the 83. For beginner, I'm just gonna say it price stayed above the 83 EMA, which is the turquoise one. And so I got in right here and I called this in the group. I got in this area and then went all the way back up. And so that's why I'm saying, like, if I want to consider I'm wrong, price staying under or closing under this 21 and 28, it may lead to a dip down to the 83 for it to head higher. But at the same time, Usually that's a bearish sign, but as you can see, there's times where it will just dip down to this one and then go up. But if it closes under the turquoise one, which is the 83 EMA, I'm definitely getting out. There's no way I'm staying in there. Um, I mean, you can if you want to, but me personally, I'm not staying in there. I've learned from, I mean, I've been trading and investing since 2015, so 9 years of experience. And so, and this one, if it can dip down. This one's not that volatile. It's only going from 30 to 34, so it's not that much volatility. And so, um, price action wise, like how this chart looks, it looks good. But as far as like volatility, it's not that volatile, so I likely would not take that dip. We just need this to get up to 10%. You can see there's a wall here at 50. Oh, they blasted through it. Perfect. And so we should get our alert hit right here. This is our 10% alert. Um, what's the high of this candle? 54.22. So it did break that high. And see, and so I'm just going to be watching for potential to where it could possibly top out. What if you're a beginner, what does top out mean? Like turn. That was an interesting turn right there. That was very quick. And so that tells me that someone was just selling a large order. But we'll give it some time. Oh, and what's a little bit more advanced, but something I do. At 5% profit, I take 50% of my trade off. And so, and I have it like preset. I don't do this every time, but it depends on, and that's why I'm saying it's a little bit more advanced. If you're a beginner and you just want to start building your profit up, the success rate is usually about 80% or higher of the trade dipping down here to just as long as it's volatile. So like if you build a checklist, if you pause this video and write checklist and you write this out, volatility is just for large price movement. Excuse me. Large price movement. Next is dip down to 21 and 28. After 9:30 a.m. Eastern. And then if you're a beginner, you want to build your price up, all you have to do is um, let it dip down to 21, 28, get in, and then just sell 100% of your position at the 5% mark. And then if it goes up to like 7%, 6%, I mean, you'll just have missed out. But you rather build up that cushion first, and so then you can start taking more advanced entries where entries and exits to where you're getting in on the dip. It's now officially touched it, so this is more ideal for it to catch it in this area, but only catch it when there's 3 or 4 digit orders. And so if you see right here, there's no 3 or 4 digit orders. It's only 2 digit. Right here is the 3 digit. And so I would be looking to get in right here as soon as I see that. And you could see how fast it just bounced off of that 46.8 level. And so that's exactly what you want to do. I know it's moving fast, but you won't miss your entry. You won't miss the entry. But as far as advanced exits, it's like get in on the dip, which I got 50.505. It went up to 53 cents and basically held. And then it pushed up. And so in here, if it would have just pumped, I wouldn't have taken 50% of my position off. But the fact that it just stalled right here, let's see, the height of this candle was 54.22. And so if I look right here, 54.22 minus the entry I had. And then if I divide that by my entry, oops, if I divide that by my entry, this this is 7.3% times 100. So from my entry here at 0.505 to the height of this candle means I was up 7.3% gain on this move. What does that mean? If you're using, everyone starts at different levels. If you're using $100, this means that you were up $7 and excuse me. If you're using $100, this would mean you're up 73 cents. What am I talking about? This is why I use the calculator. I've always been good at math, but in the morning, sometimes my brain is running a little slow. If you're using $100, 7.3%, which means you would are up $7.30. Okay. If you started your investment journey with $1,000 and you were using 1,000 on this position, that means you were up $73. If you were using $10,000, that would mean you were up $730. And then for me, I put about 100K into this just now, and so I was up 7,300. And so here at the height of this candle, I was up 7,300. If it would have just immediately blasted through the levels, I wouldn't have sold 50%. But so there's no reason for me to not sell 50% when it's just sitting here. That's not the type of dip and balance I want to see, especially when it's just went from 22 to 76. Like this is a very volatile push. And so for it to get to the area of interest and then only do 7.3% in basically 15 minutes, like that's not the type of price action I want to see. And so I took 50% off at that first level, which was 5%. So that means I locked in 5K. And so now, again, it's still it's still doing what I expect. I expect it to stay above. I mean, really, I expect it to stay above this white line if you want to make it simple. And so right now, look, I'm back in profit. So maybe I didn't have to sell 50%, but just sitting in this area is not bullish price action to me. I want to see it just go straight up. Just like over here, it went straight up, it dipped and went straight up. This is exactly what I want to see over here. If I don't see that, I'm going to start locking in my position. And so I can have money locked in to protect my account and protect my gain. And so, but yeah, if you were up, and then I can make a little sticky note. And I'm gonna post this video in the chat, like in the group, but I'm also gonna post this video on YouTube and possibly Instagram. But let me move this. And so just to reiterate what I just went over. So if you started with a $100 investment account and you got in at 505, just like I said, and then we were up 7.3% gain, that means you were up. Let's do it let's put profit. Let's just, whoa. The tab doesn't work over here. Okay. Let's put profit. And so let's do $100 investment account. Your profit would have been $7.30. You may be saying to yourself, why would I care about $7.30? That's $7.30 made in 5 minutes, 5 to 10 minutes. There's people who work and make $7.30 an hour. And this is an extra cup of coffee, extra lunch, breakfast, whatever you all spend $7.33 on. If you're using $1,000 account, excuse me, $73. $73 is, you know, I don't even look at when I spend money, I don't even check anymore. Back many years ago, I probably would spend $73 on definitely groceries, uh, gas. This was definitely like the car I was driving. It was a coupe. This would be almost two tanks of gas right here in 5 minutes. And so, and then if you're using 10,000, I keep forgetting that. And then this would be 7,300. I mean, this is someone's monthly income in 5 minutes. And this is why people invest. This is why people trade. We entered right here live on this recording. This is recorded. And we didn't even get the best entry. Went up, and somebody's gonna work very hard just to make this in 1 month. And you had the potential. I don't know why I just put. Make sure you eat breakfast before you trade. Keep your brain functioning correctly. This is not someone's, well, I'm sure this is someone's in monthly income, unfortunately. This is someone's weekly income. 730 is like, this is like $18 an hour, $19 an hour. So somebody who works 18, works at 18 or 19, let's get the exact number. 730 divided by 40. Yeah, somebody who makes 18.25 an hour. You put in 10K here, you get out in this area, you will make their entire paycheck in 5 minutes. And then this is the amount of money, about the amount of money that I put in. And so I was up 7,300 at the max, took off 50% because this price action, it didn't just dip out. It is holding very nicely. So if this candle breaks past this one, it should break this high, which should break my alert, and then I'll be up. I sold half my position, so I'll only be up 5K. But if it comes back up to here with this middle view up, if it rejects it, I'm gonna dump the rest of my position. If it just blasts through it, I'm gonna hold and try to well, not try. I'm going to attempt or sell the remainder of my position on this high right here. But if it just keeps staying in this area, I'm just gonna take off the rest basically at zero and just call it a 5K day and be done for the day. And then of course with stocks, as your account grows, I've definitely put $1 million into a position before, multiple times. I wouldn't do it in this position because I mean, putting $1 million on this type of price action is not really what you want to do. If you if this gap up wasn't so large, I would definitely consider putting $1 million into a play like this because the volume is very high. But with this type of gap up, like I'm not ever interested in putting that type of money into this play. But someone who put, because somebody did, I mean, this has done 57,000, 58 million shares on the day. If you do 58 million shares on the day times the current price, we'll just call it 50 cents. That's $29 million that is traded today. So somebody definitely put more than $1 million into this. Whether it was one person, whole bunch of people, there's been $29 million traded in this stock today. So you definitely could have put $1 million in, and then you would have been up $73,000 in 5 minutes. You wouldn't have been able to execute your entire position right here, but for it to be sitting here this entire time, you definitely would have been able to get out of your position, the $1 million position. But for me, I just need I just need price to break past this high, and then hopefully we'll get that push. But this chopping back and forth on top of here is not what I like to see. But again, that's why I locked in percent of my profit on that first push, is because I'd rather lock it in than potentially lose it all. And we have ASTI. Not interested in this because it's below the pre-market high for this scanner. This scanner is different than this where I pulled this stock from. So not interested in that. EGIO. And this one, yeah. This one right here, as soon as it broke this pre-market high, would have looked for the pullback underneath the middle VWAP, which is the purple line, and basically in this area. So anywhere in this area would have considered entering. Only place that you would have been able to get in was right here. And so if I would admit I didn't trade this. I'm just talking about how I would have executed. If I would have missed this dip here, I wouldn't have chased. I wouldn't have bought it over here. I wouldn't have bought it over here. I wouldn't have chased it. That's just me. I've learned to be extremely disciplined in my trading. And then let's put WKHS back. And again, see, this one's not that volatile. And then let's check the scanner to see if there's anything else. All right, and so the other scanner, STI, STI. Okay, I mean, it's valid, but yeah, 48 cents to 63 is pretty volatile, but it's not that much volume. Like these little white dashes and these spaces, like how these candles look, it's not that much volume. Yeah, it's only done 500,000 shares on that day. This one has volume, but that daily chart is not what I'm looking for. This one is underneath the pre-market high. And then that's the one we just had there. Maybe that was the dip they need. Maybe they needed to dip it down to the 28 EMA before they take it higher. But I took off 25% again in this candle. Like I literally have 25% left, 25% of my position left. And this is good. This is a great example to show for the video, because a lot of times people want to just show the ones that dip down here and then just go straight up and show you how awesome investing and how awesome trading is. This is a great example that is showing that you're right, but there's different levels of being right. Because you could be right, like we were, and I could have just took 100% of my position off and been done. Called it a 5 to 7K day, and I'm done. Or it could have dipped down here. It could have blasted through the 5% alert, blasted through the 10% alert, went to here and just blasted right through it. And then I mean, I would have been cashing out on the break of this high, which would have been, we'll just call it 74 minus 50.05 divided by 50.05. Would have made 46.5% gain. And so 46.5% gain on 100K. Let me put the highest we were up so far was 7.3%. 7.3%. So 100K right here, instead of 7,300, it would have been 46,500. How do I know that? 100,000 times 46.5% is $46,500 profit. But that's not what happened. That's not the price action that I've been looking at for the last 5, 10, 15, 20, 25, 30 minutes. And so when you got the push up here and then it didn't break this and then it just held right here, that's when I took off another 25%. Because I don't know if they're looking to dip it down, or maybe this was the entire move and the buyers are done with it. Either way, I don't really care because I got the entry that I was looking for. I got the necessary entry. And that's why you got to be patient. Because if I entered in this candle or in this candle, I would have been negative this entire time. I wouldn't have been cashing out anything. I would have been taking a loss. And so that's why patience is so key. And this one didn't even dip down to the 21, 28. But I mean, I have 25% of my position left. I've locked in just under $6,000. And so if I need to cut this piece for a loss, I will still be in profit because it's so small. And again, why did I take off per pieces of my position in this area is because this is not the normal price action that I see. When something this volatile pushes up, dips down to the 21 and 28, this red and white, and then it usually just pumps straight up to 5, 10, 15, 20% gain pretty quickly. The fact that it just trended sideways is what's been causing me to take off 50% here at 5% gain, 25% here at, it was like 3 point something percent gain. And then I have 25% in that is currently negative, but I'm still net positive on the position. But like I said, when I consider myself wrong inside of making an investment, and that is simply when price dips down, I get in. If it does not go 5 to 10% gain and just closes underneath this white EMA, this white line, which is the 28 EMA, if it just closes under it, I will consider myself wrong. Now, if it comes down here, and again, I showed this earlier in the video, if it comes down here and supports and goes back up, there's potential for me to be right. But like I said, for the most part, just price action, the candles closing underneath this white line, that is not a positive sign to me. And again, I mean, it's not even touching the white line, which is very bullish, but at the same time, it's not going up, which is not bullish. So it's basically like in between Like it's creating this sideways price action channel. And so majority of gain is locked in. It looks like it's gonna hold. Maybe it'll pump. And then again, for the most part, what I'm looking for is dip down, volatility, dip down to 21, 28, get in, 5 to 10% gain. If it gets here to this purple line, I need it to blast through it or just go to it and start trading above it and then potentially break the high of the day. And you may say, well, this is the high of the day. This area, this gray box is pre-market. This black box is current market or post-market. Well, I'm not going to call it post-market because post-market is after 4 p.m. This gray box is 4 a.m. to 9:29 a.m. This black box is 9:30 a.m. to 4 p.m. And so I'm looking for it to break the high of this black box. This is the high, but it's just the pre-market high. And this high is more relevant than this one because of this volume. This volume bar is much larger than this volume bar from this high. And so that's why this high is more important to me. And you can also see the high of day on the daily chart. This is the 50-day, 1-day chart. What does that mean? There's 50 candles. Each candle represents 1 day. And so that's what this means, 50-day, 1-day chart. That's the chart I use. And so you can see the high of day. If I hover over this candle, the high of day is 0.7384. I can see that right here, and I also can see it right here on this little box right here. It shows me the high of days. And so locked in my gain, majority of it. And again, it's still holding. So I'm not being impatient and just getting out. It's not, the price has not told me to get out yet. Because literally, volume could come in, there could be a large volume bar, and next thing I know, it's at 57. Next thing I know, it's at 70. Next thing I know, it's at 77. Next thing you know, it's at $1. And so that's why I said you must have patience and discipline. I have discipline to take profit off instead of just taking a loss because the price action is just going sideways. I have the patience to wait to give the play time to potentially get here, see how it reacts, and then get in this area and see how it reacts again. And then I want to take off. I want to only have like 10% or less of my position on breaking this high for sure. But as you can see, it hasn't even got to the purple line or up here, and I only have 25% of my position left. And that's why people should have a mentor in order to know, not just get in here and then not take any profit off in the 5 to 10% range. Because if I range this out, we had our 5%, we had our 5% at 53. 53, and then we'll just, you can see this alert, this point quadruple 5 never got hit. And so that's our range. That's our 5 to 10% range. And you can see it touched it here, which is where I took off the position when it just sat here. The fact that it didn't even touch it. And then it touched it again here, came down, and then came back up, but didn't break past this high. And I was like being a little bit more patient by waiting for this candle. But when this candle just sat here, that's when I took off another 25%, and I only have 25% left. And that's why it's ideal to have a mentor, because someone else who may not have a mentor or not know what they're doing, they could get in here and then just hold it, and they could be taking a full size loss when they could have been cashing out in profit to, because that's what the price action is saying. And then they could still be in the move knowing that, okay, price is not going under here yet. So I'm just gonna hold this. Or if you have something to do, if you have something to take care of, then you're just gonna get off and be done for the day. Take off 100% of your profit, and then you'll definitely be a net profit. If you took off 100% here, you would have been done. Your day would have been done. You would have had 5% gain up to 7.3% gain. And then, so this candle broke past this candle. So that's a bullish sign. That's a good sign. It needs to now break past this high. You would just want price when you're buying, you want the candles to be breaking past as many highs of the previous candle. And so now look, we're back in profit for the last 25%. And again, if it gets up here, I'm seeing how it reacts. If it just goes up here, touches this and rejects it. What do I mean by reject is like right here. This is a pretty good example of a rejection. Price came down, touched it, and then went right back up. That's what I would classify as a rejection. If this comes up, touches it, and comes right back down, I'm gonna dump the remainder of my position. Thankfully, it would be over 10% gain because this quadruple five is 10%. So 57 would be like 11 or 12%. And so I'll be cashing out in this area. If it just blasts right through it, I'm gonna be holding it to see if it can get up here. And then I'll decide what I'm gonna do. Now, here's multiple scenarios. And these are really the only scenarios that can happen, which is another thing that I've always loved about trading and investing is that majority of everything is defined. You don't know what price is going to do, but you do have a definition of what you can expect. And so now at this point, well, we were in profit, but now at this point, we're barely negative on the last 25% of our position. We did get a new high. This candle broke past the high of this candle, but this high right here, this high didn't even break past this one, which is not a bullish sign. And so we would definitely want that to break. But the scenarios I have is price comes up to this purple line, which is the middle VWAP. If it touches it and rejects it, I'm going to dump the remainder of my 25% of my position. If it comes up to it, goes through it, stays over it, the next candle stays over it, I'm going to be looking for it to break this high. But now, if it comes up to this, and so right now I've gone over two potential examples. The first one was it coming up and touching it and just rejecting it. I'm dumping the remainder of my position. The next one is it coming up to it, closing above it, staying above it, and then potential look for a break of this high. The next example is it comes up over it, trades in this area, and then comes right back down below it. I'm then dumping the remainder of my position. There's only three things that can happen. There's not any other possibilities. There's only three things that are going to happen. It's either going to come up, touch this, and reverse, or it's going to come up, trade above it, and potentially break this high, or it's going to come up, trade above it, not break the high, and then come back down under it, and then I'm going to get out. So I only have to look for three more things. And that's one thing I've always loved about trading. The first thing I had to observe or look for was volatility. This is like a 200% push. Perfect. Next, what am I looking for? I needed to come down to this red or white line. Okay, perfect. Buy it. Okay, I bought it. I needed to go 5 to 10% gain plus. It did that. It went all the way up to 7.3%, which is not truly ideal, but it's still more profit that builds my account up and keeps me from having to work a job. Because being up 6K for the day, no job's gonna pay me 6K a day. A business will if I was a business owner, but I'd rather do this when I can do it in 5 minutes. And so next expectation was, okay, see how price action reacts. price action is not being ideal. It's literally going sideways. It's it's not the most ideal, I should say. It is ideal because it's not trading under this white line, which is the 28 EMA. So perfect. But most ideal is when it dips down here, I get in, this candle just rips through all this. That's what I love to see. That didn't happen. Perfect. Take off 5% here or 50% here at 5% gain, 25% here at like it was like 3.4% gain. And then I still have 25% in because it's still above this white line, but it's also not gone where I expected yet. And so, like I said, if I had something to do, okay, so now we're getting the high. This candle should start pumping because this looks good to me. But yeah, okay. And so now it's back into the range. Well, at the bottom of that range, it touched the high. The high of this current candle is 53. But again, looking for it to come up here. And initially, like say, let's do this. Let's say right here. So I see the volatility, I get the dip, I get in, right? Next candle, I'm looking for the same thing. I'm looking for its 5 to 10% plus gain. Come up here. If it touches this, rejects, dump my entire position. If it comes up here, goes through it, trades above it, I'm looking for it to go through the high. If it comes up here, goes through it, goes through the purple line, which is the middle VWAP. If it stays above it but doesn't break this high and comes back down below it, I'm going to dump the remainder of my position. There's only three things that I'm looking for. There's only one thing I'm looking for to enter, and there's three things that I'm looking for to exit, or four. There's four things. There's a 5 to 10% gain plus. There we go. So now look, we're up over 10% just from being patient. Now it would be wonderful if I had my entire position still in, because now I'll be up like 12,000. But I don't really care because this price action could have led to just dumping down. And so I'd rather have locked in 6K in this sideways chop than lose 10K in this and it dumping down here. And so now again, look, it came right to it and it didn't touch it, but I want to see how it reacts. VWAP is volume weighted average price. If price action is below this, it means majority of buyers are negative. If price action is above this purple line, it means majority of buyers are positive. And so under, most buyers are negative, over, most buyers are positive. It's now touched it. And so if this rejects it, right now this looks like a rejection to me. But it could just pump right up because there's not like a large wall. And so same thing when again, this is more advanced. As you saw, when I was looking for to enter, I was looking for 3 and 4 digit orders on this side to get in. And now right here, you see this 4 digit order at 57? That is what's causing it to reject this purple line. And so to me, that's not a good sign. See, if I have 3 digit orders, but it's a war there. It's coming down. To me, this is rejecting. And so 1 second, I'm gonna sell 15%. So I only have 10% left. I'm gonna sell it at 55 right there. All right. So now I only have 10% left because look, to me, this is a clear rejection. It came up, touched it, and it's rejected. This is not a bullish sign to me. But now again, it's still above the 21 EMA, which is bullish. I now only have 10% of my position left, and so I will let this ride. I will let it see if it's gonna come up above, or if it just fully rejects, I'm just gonna sell the last 10%. There's 45 seconds left in this candle. It's not to say the next candle, just because it rejects right here, the next candle could just blast right through and keep going higher. But for me, I've been sitting in this for an hour. And so I'm kind of done with it, you could say. And so I'm about to, I mean, there's 19 seconds left for this candle. All right, new candle. It closed kind of strong. And so I have two options here. I can see that is clearly respect to the 28 EMA, which is the white line that we talked about. And I could just hold this last 10%, or I can give it another chance to break that purple line and potentially break that alert I have at 74 cents, or I can just dump it all right now and get out and just complete my day of trading. And it looks like I'm up about $7,328. And so with that, because if this goes back, if price goes underneath the low of this candle, I'll be back negative. And to be up 12% in this candle and to go back negative, even though it's only 10% left, not really interested in doing that. And so if it breaks 52, because there's a 3-digit order there, if it breaks 52, I'm just gonna take off the last 10%. That'll be the end of my trade. And then that'll be, of course, the end of the video. And again, we'll likely be right back here tomorrow morning, um, depending on how the market looks. And so, but yeah, I'll put this video in the chat, of course, for the paid members, and then I'll pull this on YouTube, and then um I'll I'll probably I'll put a snippet. I'll put a snippet of this video on Instagram. But yeah, for now, we'll just let it ride. But yeah, I prefer days like this. I prefer days like this because for teaching purposes, so you can understand how simple it is to make money, but how important it is to have discipline and patience. Now, because I mean, we legit, we're in this at 9:45. And so imagine if you were only using, imagine if you're only using $100. Um, I mean, if you're only using $100, I'm basically up like I'm basically up like 7.4%. And so it would have taken you less than an hour to make that $7.30. But as far as this goes, this 1,000 or even 500, if you're using $500 account, $1,000 account, you would have been up $73. 10K, that's when it becomes a little bit more meaningful. I mean, even $73 um in an hour or two, like at a job, you would have to be making, I mean, most people don't even get paid that much. 73 divided by 2 is $36 an hour. Most people don't get paid $36 an hour. More realistic is it would take somebody 3 hours to make this. And so even though it doesn't look that meaningful, if somebody is making $24 an hour, it would take them 3 hours to make this. but more meaningful numbers, of course, here. Because 10,000, you make $730. Whether you do it in 5 minutes here, or you take out pieces and get a little bit more and you do it in, um, we'll call it 50 minutes. Call it 50 minutes here. And then where the more significant money is, of course, 6 figures, 7 figures. But I mean, even this, if you make this a day, you're gonna you're gonna be pretty well off. $730 a day, you're pretty well off. I mean, people who make this a week feel like some of them feel like they're well off. And so whether you do this a day or a week, and again, this is only a 7.3% gain. This price action is not ideal at all. Uh, like I said, a more realistic trade would have been a dip down here, immediately go 10, 20%, 25%, 50. Like right here would have been 46% gain. Like that's more ideal. And that's usually how the plays pan out. This one didn't. Who cares? I took pieces along the way. My best sell was up in here on this rejection. Um, and again, I'm still holding another 10%. Even though it's only 10%, if it goes up 46%, that will likely put my position at like 8K for the day. And not even on an ideal price action play, which is more than more than anything that most people would be to be grateful about. And so just like that, I had my order ready, finger on the trigger to sell it if it broke 52. Broke 52. I've now closed 100% of my position. And so I'm fully out. I'm not going to reconsider buying this. I'm not going to buy it again. This is not ideal price action. Going to delete this alert. And that was the play. Again, the checklist, look for volatility. 22 cents up to 76 cents is like 200% gain. Come down to the red and white EMA, and I called this in the group at 9:20. So somebody had from this candle, they had to wait all the way until over here or over here to get in. They get in and they make, let's see the height. This is 57.54. 57.54 minus, we'll just use my entry, my exact entry that I got. Definitely not that. We'll use my exact entry and then, whoa, 57.54 minus 50 divided by 55. 13.9%. So someone make 13.9%, which if we do that, 13.9% gain on this. This is how the numbers will look. 13.90, 139. So from entering here or in here and price going up here, which is not even ideal. I mean, this is uh, over 10% on a trade. I'm pretty good to go. There's not ever any complaints making money. I'm not gonna complain about making money. Trust me. But this is not the most ideal price action, but to go from here to 13.9% here in 30 minutes. And this would be your starting account investment. Like if you put $100 investment, 30 minutes, you would be making this. $1,000 investment, you would make $139. $10,000 investment, you would make $1,390. 100K, which is what I put in this candle here. I I didn't do 100% of my position in here and then out here. If I did that, then my profit would have been 13. About it would have been about like 13,500 for the day. But again, I took out pieces and I went over that in the video of why I took out pieces along the way. And I still made 8,000 today. And then I didn't put a million in here because of just this, how volatile this is. But the people definitely did. The volume's up 73 million shares on the day now. When it was at 58 million, that was $29 million on the day. So you could easily put $1 million into this play, and then somebody could have made, and people do make $139,000 in 5 minutes. So you can make someone's weekly income in 5 to 30 minutes, or well, let's call it 10 to 30 minutes. 10 to 30 minutes, make someone's daily income 10 to 30 minutes, make someone's hourly income in 10 to 30 minutes. This is this is probably two to 3 months for majority of America. If you have a high income paying job, this is like 1 month. And then this is someone's yearly, this is more than someone's yearly salary for the most part. And that's why people invest. That's why people trade. The thing is, you just got to know what to look for, and then you have to be disciplined and patient. And the great thing about this group, you don't need to know what to look for. I know what to look for. I just told you what to look for. And I'm going to continue to tell you what to look for. Why? Because I'm looking for it. Like I'm investing to make money. Thankfully, I get to record it and share it so you can have the opportunity and the possibility to do the same exact thing. There's no reason anybody watching this video didn't make 5 to 13.9% gain, other than them not doing what I just said to do. That's the only reason someone would not do that. And so that'll be the video. And again, we'll likely be back tomorrow. Hopefully we'll get some better price action. I do want to see something else. Like I want to see uh that's not, I mean, this is volatile, but it would need to dip down to the 21.28. But I'm not. It's already 11 o'clock. I'm not about to go enjoy my day. I want to see. Okay, right here. Perfect. This is more ideal price action. Couple things. The pre-market high, well, again, this is gray box. Price broke above it. Look, it dipped down to the red and white EMA, right? It held it, and look what it did. It came up and basically was trading on top of it. It rejected here, but then volume came in. This this blue box is volume. It came in, blasted through, went right through the high, and then went all the way up to 54 cents. This is way more ideal price action. Come up 21.28, trade above it, and then go up to the high. I didn't mean to put that line. Go up to the high here and then dip out. And so this type of play, the volume is way lower. It's only 1.9 million shares on the entire day. So I probably would have only been able to put like 10K in it. But that 10K would have, if the volume was higher, I would have put 100K and I would have made way more. That 10K probably would have made me slightly less than putting 100K in here. But like I said, this right here is what I was expecting for this to do. Like dip down, come up, trade above, break the highs. It didn't. It went straight sideways, touched it, rejected, and now it's right back on the 28 EMA. This is much more ideal, and this is what majority of the plays do. I would say like 70% of the plays do this, 30%, like 20% do this, and then the like uh last 10%, they just it'll come right here, and this candle will just close right under, maybe trade it sideways a little bit, act like it's gonna come back, and then just dump. And so, but the probability of money being made is extremely high, and all it takes is patience and discipline. I'll catch y'all tomorrow. Let me cut the recording.